Good morning, everybody, and welcome to another Fintech Nexus webinar. My name is Peter Renton, Chairman and Co-founder of Fintech Nexus, and today we have an all-star cast, fascinating conversation. We are going to be talking about international expansion, managing global fund flows, and let's get right into it here with some quick introductions. Charles, why don't you go first?
Hi, I'm Charles. I work in the product team at Wallex for our platform clients, so anyone building products on top of our financial infrastructure.
Okay, Martin.
I'm Martin Ferreiro-Subi. I'm Director of Product Management at Public, looking after onboarding and payments globally.
Okay, Jeff.
Hey everyone, I'm Jeff. I'm the VP of Product at Ramp. We're a B2B fintech company. We're focused on spend management.
All right, well, let's get right into it here. I'm going to share my screen here where we're going to go through just a very short presentation. And why don't see here? Where are we? Just give me 1 second to bring up the presentation. Wallex, okay. Okay, I'm just going to share my screen. Do that. All right, over to you, Charles.
Fantastic. So you're probably joining us. You may be working in a product team at a SaaS company. Maybe we can jump straight in with the next page. Or you're working in a go-to-market team, and payments or financial infrastructure is maybe already part of your product today, maybe in a domestic home market, and you're looking at your roadmap. Maybe for next year, you're looking at expansion into maybe across the Atlantic or into APAC, and the questions are starting to pile up. You can see them on this page. So one, you're probably wondering, should we be working with a bank? What experience are we going to get with this bank in terms of flight time, funds movement time, or costs? You may be already licensed or exempted from a license in your home market, but the cost of building that up globally may be a question. And then you're probably quite tied in terms of dev or product resource, and you're wondering how all of this is going to potentially destroy your roadmap next year. So next slide. So this is what we kind of set out to solve for you at Wallex. So we try and give you a collections payouts infrastructure, which is fast, cost effective, both on the collections and the payout side. We try and avoid you the need to have to go and get licenses everywhere in the world and revenue streams, right? So you're building probably quite a pleasing product experience for your users, and the good news is you can probably charge for that. So next slide. So what does this kind of look like when it's implemented? And this is a very typical treasury kind of funds flow that we see. So your customers are probably going to have to fund and pool funds into the infrastructure. So either through what we call like virtual accounts, or potentially you're doing that in a more pleasing fashion through direct debit, right? So you're pooling in an automated fashion out of those external bank accounts into the infrastructure. And you may be doing a conversion if your source currency is different to a destination currency, and then you're having funds out, maybe funds out into a local bank account through local rails. This is not Swift, right? Or you're pushing out through onto a card as a way of spending those funds. So last page. So how is this used, right? So you may be a software platform working in the payables type of realm, so expense management, or you're trying to simplify that kind of procurement or ERP type of experience. And so what we allow you to do is actually enhance your product with a global payout experience for vendor payouts right there within your SaaS. Or maybe you're building a product that is facilitating employers giving benefits to their employees, right? On card for employee benefits, for example. Or lastly, just go up one page. Lastly, a payroll product, right? Facilitating workforce payouts everywhere in the world. So that's kind of global treasury for you. And I think we're going to jump into some questions now.
Yes, indeed we are. Thank you very much for that, Charles. Okay, so let's get right into the meat of the discussion here. And I want to start with you, Martin. When you're kind of like Public, obviously you are an American company. You have been around for a few years now, but you now are an international company. We want to talk about what were the primary motivations that led Public to pursue international expansion beyond the US? Could you share the strategic considerations? What were the opportunities that influenced this decision?
Sure. At a mission level at Public, our mission is to make the public markets work for all people, and that includes investors outside of the US. So there was mission alignment. But we decided to start in the UK because as we learned more about the UK market, we realized that we could solve many customer pain points. For example, we saw UK customers paying high fees to trade US stocks. We also saw that they didn't have enough variety of stocks to choose or data to make decisions. So those insights, our mission and our product allow us to come up with a compelling proposition where we offer over 5,000 US stocks, commission-free trading during business hour, and in partnership with Airwallex, very low FX fees. So it makes sense strategically also to start with the UK. It's the same language, which makes the UI a bit simpler. And also it has a very strong fintech ecosystem.
Okay, so Charles, I want to go to you and talk about the infrastructure that's being built, the modern financial infrastructure that is being created in real time right now, and it's continuing to evolve. How is Airwallex adapting to these rapid changes?
Yeah, so I think what we're seeing is that some of our clients who are serving their users who have more and more either distributed workforce or distributed supply chain are really looking for that next level of coverage, right? On payouts, for example. And they're looking for a financial infrastructure provider that is high performance, be it on kind of settlement times, right? In terms of those funds getting pulled in, APIs that are reliable, that don't go down, that are transparent in terms of the fees, right, for you and your customers. The bar is getting higher in terms of what kind of a pleasing banking or financial experience looks like. Users are getting more savvy. They are getting looking to have that very kind of delightful experience. And lastly, I think from a compliance perspective, most of our clients are not licensed, and regulators are starting to be more and more kind of specific in what they need to see for those non-licensed entities, like SaaS clients, when they get into payments. So this is kind of some of the trends that we see.
Right. Okay, so Jeff, Ramp, I believe, is still just a US company, but what are your expansion plans internationally, and what's driving some of the decisions you're making?
Yeah, I mean, I think international expansion means a lot of different things. So on the Ramp side, it really is around continuing to go up market in the US with larger companies that have international presence and international activity. But we actually see that even SMEs and mid-market companies have international employees, which requires some sort of financial services as well. About 7 to 10% of the businesses have substantial employees abroad, especially during COVID. So our plan is basically to support these companies. And so it's not like to go to market and try to acquire companies internationally. It's to just follow your customer. And I think from a compliance standpoint, that is also a big factor to play in.
So you have international companies right now that you're helping with their international employees?
Yeah. So for example, Shopify is a customer of Ramp. They have about 14,000, 15,000 employees globally.
Right. Okay. Interesting. Okay. So then what are the challenges? And this, maybe Martin, I can turn to you first. You already started this journey into international expansion. What are the big challenges? What are the barriers that you've encountered when expanding into international markets? I know it's probably a big question, but want to talk about it specifically in relationship to money movements, like accepting, storing, paying out funds on behalf of your customers.
Yeah, so in money movements, I think the biggest barrier or issue is complexity, right? Like payment rails are local. From a business side, you want to provide a delightful experience where our members can deposit into their brokerage account, they can make withdrawals, get money back to their banks. But what that means is basically a completely different set of payment rails than what we use in the US. Edge cases are also very different. If some of you operate in the US, you know the word reversals pretty well. That's not an issue in many other countries, right? And similarly, the speed at which money moves and cost also is something local. So you're trying to solve for different places which have different sets of infrastructure while achieving scale, speed, cost, and that adds more complexity. The second one, I know it sounds obvious, but if you only operate in a country and you have a currency you support and suddenly you start operating in others, you're suddenly transforming your stack from single currency to multi-currency. And that involves obviously FX, involves finding the right partners to help you convert currencies. So that's a new thing that you need to support.
Right. And then, so Jeff, what have been the challenges you've encountered so far as servicing your clients that do have international workers and doing international payments?
I think that the biggest challenge has been, who should be involved in the vendor assessment process. Typically you have like partnerships folks trying to partner with large vendors, but actually the right solution is to have a very strong product management team, engineering team, and legal and compliance teams that are going super, super, super deep. Otherwise you're sold something that like largely doesn't fit your needs. And so some of the challenges for us were, partnerships going too deep in the sales process and then actually like not being clear enough in the details of what we need. So number one, like be super clear on the problem you're trying to solve and like write down your requirements before getting sold. Number two is to like bring in a cross-functional team and to really go in the details. Everyone should read the contract. Everyone should read the RFP. Everyone should actually read the API docs. And then number three is to really shop around to understand what are other vendors talking about and their value propositions, and shy away from vendors that are just saying, hey, like we can do all of the things for you, don't worry about it. Actually like partner with vendors that actually teach you and educate you on what you should be thinking about, that can actually push your thinking versus abstract your thinking away. So those are some of the things that we'll think about.
Good. Very good points. Okay, if you have a question for our esteemed panelists, please hit the Q&A button. We'll get to those towards the end. This is a 30-minute webinar, so we're not going to go to the top of the hour. I know we're a little bit late, but we will be getting to questions here in a little bit. Okay, Martin, then you've partnered with Airwallex. How has that accelerated your international expansion efforts, particularly in terms of the financial infrastructure and payments capabilities? Yeah,
so in the UK, I think our wallets allow us to create a frictionless experience where our members convert their pounds into dollars to invest in US stocks. And one thing that I think accelerated our expansion is that through our wallets, we can offer very, very low currency conversion fees, which are pretty unique in the market and allow us to continue to grow our UK user base. thinking more longer term, our Wallex actually supports multiple countries, so we could expand and basically using the same infrastructure support international payments in other places as well.
Okay. Okay. So, and Jeff, as you know, as Ramp expands into new markets, how do you think about building the functionality yourself versus working with an infrastructure partner like Airwallex? And do you look at this on a country by country basis, or is this sort of a more holistic approach to global expansion?
Yeah, I mean, Ramp's been always partnering with infrastructure providers on things that we don't really need to have a competitive advantage on, or we're okay giving margin away for, right? Or we're able to negotiate margin down. So, you know, early days, you know, we're Marqeta and Stripe for issuing, for example. You know, we're on many different providers. We use software and partners as fast as we can to test these things out. And so definitely don't think that international money movement is going to be a competitive advantage for us, and nor do I think we have the internal expertise to do that. I think that, you know, when we think about country, there's a combination of like countries where customers have pain, but they have pain because there's no infrastructure. So you're kind of in this like quagmire of like, well, there's no solutions for those countries, and countries where they have a lot of activity but less pain. So I think for us, we're really focusing on partners that have, you know, what we call like slope, not intercept, meaning like partners that have a very rapid development process and are iterating. So if I look at like, you know, partners release notes in their API documents over the last like 12 months, like how much innovation have they actually put into it versus partners that have not? Because we're gonna be partnering. It's a very sticky integrations oftentimes. And so we're going to be partnering for quite a bit of time. So that's a little bit of how we think about it.
Yeah, very, very good points there. Okay. So Charles, turning back to you, I'd love you to share some examples of, you know, how fintech companies, software platforms, how are they adding new revenue streams with Airwallex's embedded finance solutions?
Yeah, so it's a range, right? So we try and not have excessive dependence on kind of one type of revenue. People are probably familiar with interchange, but when we're talking global money movement, there's obviously FX involved. We try and give our clients kind of the lowest rates, as Martin was saying, right? So that they can then decide based on their product experience and how pleasing it is for their users, what is the kind of right level that they want to charge to their customers. And I think the best, and that's across FX, kind of payout fees, or even we have companies that even create kind of on-platform, wallet-to-wallet kind of transfer experiences. But I think that some of the most interesting conversations we have is when kind of our clients recognize the value in the stickiness onto their platform that this capability provides, and potentially justifies maybe a higher SaaS tier or something like that. That look at this experience as kind of really complementary to theirs, and enabling a kind of powerful product and on their side.
Mm-hmm. Yep. Okay. So, Jeff, maybe I'll turn back to you. What are the ways in which your platforms have leveraged global money movement services to create new revenue streams? Have you done that while adding value for your customers?
Yeah, I mean, for us, you know, the biggest thing we hear is, hey, I have global employees, but outside the US, they feel like marginalized with, you know, the financial services that they're offered. You know, call it like a contractor in India waiting, you know, 6 weeks to get paid back in their local currency in India, when like you're meant to be a global company. So there's a lot of pain in terms of just the predictability of money movement, the cost of those money movements, and the actual operational overhead. And so, you know, one of the first products we launched was, you know, our international reimbursements product that enables you to pay, you know, any contractor or any employee globally in almost any currency. And we offer that with like the lowest exchange rates. And so it's kind of a win-win-win because it's all within the same platform.
Right. Martin, what about at Public? Have you could you elaborate on some of the ways that you've leveraged this global money movement services to create new revenue streams?
Yeah, I think I would say two aspects. One is that by using open banking in the UK, we have made it easier for UK members to access the US stock markets at very low FX fees. Then from a revenue side, you're adding a distribution channel that we didn't have before, which allow us to offer our core products beyond the US, and that diversifies our revenue.
Right. So you're going country by country, right? You're like, is the UK the only country you're live in right now, apart from the US?
Yes, we over the long term we are going to expand to other countries, but yeah, that's where we launched back in July.
Gotcha. Okay. Maybe we'll get to some audience questions now. If you have a question, hit the Q&A tab. We've got a few that are coming in here. Okay, so what are some of the key motivators for companies to start global expansion and start offering financial services like money movement? Who wants to take that one?
I mean, I'm happy to take it. I think you need to be pulled by your existing sales process, to be honest, as a first indicator. I think oftentimes companies try to expand internationally too quickly and underestimate like how much TAM there is within their market and how hard it is to expand internationally. So I would say, like, you know, get to a certain market share, and then your customers will be able to like pull you in. So as your brand kind of expands beyond certain borders, or in Ramp's case, large companies are pulling you and asking you to service their multinational entities. That's a good signal to go on. But in general, we haven't seen a ton of success in companies kind of, you know, US companies expanding into Europe or European companies expand to the US unless they're really, really large. Clear example of that is, you know, Adyen try to enter the US market, or Stripe entering the European market. So
right. That dovetails into the next question here. What experiences do the panelists have of curious to hear experiences specifically working with companies expanding from the US to Europe or from Europe to the US? Maybe Charles, I mean, we've heard from Martin who's done that. Charles, you have experience from the Airwallex perspective?
Yeah, I mean, we've seen the US into Europe flow a few times, so maybe I can comment at least on that. Europe is, so the first thing is kind of like, it's not one market, right? So your onboarding experience, the sort of direct debit rails that you're getting, the payout experience, and the instantness of SEPA versus non-instant SEPA, and understanding those nuances, I think is some of the things that are must-dos if you're thinking about that sort of move. And then I think from the second key pillar is the FCA and the European kind of continental European regulators are much more stringent on things around authentication, on things like who can be in the funds flow, are you allowed to hold funds, how does payment initiation need to be handled by end users, not by yourselves. So some of those more regulatory challenges that you want to be solving in as light and robust way as possible for your customers, but it's not just a kind of a US lift and shift type of operation.
Right. Okay, so you obviously you work in a competitive environment at Airwallex. What are some of the key differentiators that separates Airwallex from others in the space?
Yeah, so I guess most importantly, right? So we try and we're on the mission here to build a global platform. We're not building a localized kind of European BaaS solution or a localized US BaaS solution. We want to abstract that complexity for our clients, and we want to allow them to leverage all of the infrastructure that we spent years building, be it from a Rails perspective, licensing. This is before even you talk about things like operations teams, compliance teams, MLROs, all of that infrastructure that we basically want to provide for you in a global, one kind of global API and everything that comes with it in terms of operations and tooling. So that's kind of the single biggest thing that I think really differentiates us versus some of the more localized BaaS players.
Mm-hmm, mm-hmm. Okay. Question about this came in. Jeff has already answered this question in the notes. So if you look it up, you'll be able to see what there's a link there. But maybe I'll just ask it just to make sure everyone is clear. For someone who wants to get a 101 in global card issuing and global payments, what would you recommend reading up on? Jeff, do you want to just tell us a little bit about?
There's a ton. I just shared two that I enjoyed, but there's a ton more there. So I think if someone wants to crowdsource these things and publish it out, I think they're great resources.
Right. And for those that are watching this afterwards, won't see this link. It's anatomy of a swipe, and that's what's strategy. Anyway, I think if you can reach out to Jeff, and he can send you the right way. Okay. Just a couple more questions here from the audience. Curious to hear the panel's thoughts surrounding distributed ledger technology enabling international payments with emerging DLT offerings from global banks such as JP Morgan's, Onyx. We've got Citi as just recently in the news with their token services, private providers. Is adopting technology like this even on the radar as a threat option, or is it still too nascent?
Martin, maybe do you want to give that a crack? Or
Yeah. I think it really depends on the use case. There's definitely a lot of potential for either solving for payment rails which are too slow or cutting people, middlemen, right, from the equation. But if you think about a consumer app like us, what you really want to get is people to use payment methods they're very familiar with, around commonplace in the market. If you're in the UK, you know faster payments very well. Money arrives in minutes, and it's very, very common to use it. Therefore, that's much stronger if you want adoption than going through a new nascent technology.
Okay. Another question here. This is an interesting one. Can the panelists shed some light on how to enable global direct deposit?
Yeah, very quickly. Direct debit rails are not kind of available globally. It is dependent on the market. That's the first thing to note. The second thing to note is you've got to kind of take into account settlement times and the risk of recalls, right? You do have fraudulent customers that will recall direct debits, and you don't want to be out of that. So that's the whole risk conversation around direct debit. And then yeah, I think those are the two of the main things. But then and when you're speaking to your providers, you want to get quite granular around which specific market they support direct debit in, with what settlement times, at what costs, and what sort of collateral or dispute rates they see, recall rates they see, just to make sure that you're having that holistic conversation around direct debit, which is something we are seeing more and more, because it allows SaaS platforms like some of our listeners today to trigger from within their SaaS platform that pool out of external bank accounts onto their platform. So it is something we're seeing more and more as more and more conversations around risk, for example.
Okay, so I want to close with hearing. I actually want to hear from each of you about this. The advice you would give emerging fintech companies, software platforms who are looking to embark on their own international expansion journey. What are some of the things that you do when you to start this journey? Martin?
Yeah, I think I would say two things. One, spend time researching the market, focus on localization. What are your customers' pain points? What's available to solve them, and how you can do better. But also, second one, and very important, it's a long process. I think Jeff mentioned about doing the research, understand the flows, do some mock-ups, do very thorough vendor due diligence to make sure like it's gonna serve your use case. And also plan key milestones that help you get there, especially if you work with engineers, to tell them you're gonna commit to multiple months of work can seem like a lot. So if you have very defined milestones, it makes the whole journey more enjoyable.
Jeff?
Be very clear on the problem you're trying to solve and the strategy that you're employing, and don't just chase TAM for chasing TAM. You have to think about what problem you're solving, and then assume that realistically, like, money movement is a commodity. I mean, there are, like, you know, partners that plus or minus have different capabilities and plus or minus have different pricing, but at the end of the day, you can't just compete on partner selection. You need to bring something else. And so what is that thing? And be very clear that the partner is available for your competitors as well.
Right. Okay, Charles, I'd like to let you have the last word here. Advice for companies looking to expand internationally.
Yeah, I think echoing Martin and Jeff on kind of the why and be careful with the amount of investment. I think the biggest thing I recommend the product teams that work with us is trying to identify that smallest meaningful MVP that you can launch in a matter of a quarter, not 9 months, and then test your hypotheses and kind of take it step by step to make sure that extra, be it what not we've talked about Europe today, is worth the buck and all the people kind of time that you're going to be putting into it.
Okay, well, we'll have to leave it there. Charles, Martin, Jeff, thank you so much for your insights there. Thank you for the audience. Sorry we had to start a little bit late today, but thank you for sticking around. Thank you, of course, to Airwallex for making this webinar possible. Have a great day, everybody. See ya.
Thank you.
Thank you.